Question 1. Process analysis reveals that a client in Georgia is seeking guidance on real estate investment strategies, expressing a desire for both potential appreciation and passive income over the long term, but also mentioning an interest in quicker returns. As a licensed Georgia real estate broker, which of the following approaches best fulfills your fiduciary duty and regulatory obligations? Option A. Suggest the client immediately invest in a diversified portfolio of rental properties, as this is the only strategy that guarantees passive income, and then advise them to consult a separate investment advisor for any other considerations. Option B. Recommend a buy and hold strategy, as this is the most traditional and safest approach, without delving deeply into the other options or the client's specific risk appetite. Option C. Thoroughly explain the nuances of buy and hold, flipping, and rental property investments, detailing the typical risk-reward profiles, capital requirements, time commitments, and potential for appreciation and income for each. Then help the client select the strategy that most closely aligns with their stated long-term goals and risk tolerance, while also acknowledging their interest in quicker returns by discussing how rental properties can offer both. Option D. Advise the client to focus exclusively on flipping properties, as this strategy generally offers the highest potential for rapid profit, which seems to be a significant, albeit secondary, interest for them. Correct answer is C. Thoroughly explain the nuances of buy and hold, flipping, and rental property investments, detailing the typical risk-reward profiles, capital requirements, time commitments, and potential for appreciation and income for each. Then help the client select the strategy that most closely aligns with their stated long-term goals and risk tolerance, while also acknowledging their interest in quicker returns by discussing how rental properties can offer both. Explanation. This scenario presents a professional challenge for a Georgia real estate licensee because it requires them to advise a client on investment strategies that carry different risk profiles and legal implications, all while adhering to Georgia's real estate licensing laws and ethical standards. The licensee must ensure their advice is not only financially sound for the client, but also compliant with regulations governing disclosure, fiduciary duties, and avoiding misrepresentation. Careful judgment is required to balance the client's stated goals with the realities of each investment type and the licensee's professional obligations. The approach that represents best professional practice involves thoroughly educating the client on the distinct characteristics, risks, and potential rewards of each investment strategy, and then guiding them toward the option that best aligns with their stated financial goals, risk tolerance, and time horizon, while ensuring full disclosure of any potential conflicts of interest or limitations of the licensee's expertise. This is correct because Georgia's Real Estate License Law, OCG, Section 43-40-20, mandates that licensees act with reasonable care and diligence and uphold their fiduciary duties to their clients. This includes providing accurate information and advice relevant to the transaction. Ethically, a licensee must act in the best interest of their client, which necessitates a comprehensive understanding and transparent explanation of investment options. Advising the client to immediately pursue the strategy with the highest potential short-term profit without a thorough discussion of risks or the client's long-term objectives is professionally unacceptable. This fails to uphold the fiduciary duty of care and could be construed as misrepresentation or steering the client towards a potentially unsuitable investment, violating OCGA. Section 43-40-25b, 1 and 2, regarding dishonest practices and misrepresentation. Recommending a strategy solely based on personal preference or past success without considering the client's specific circumstances and goals is also professionally unacceptable. This demonstrates a lack of diligence and a failure to act in the client's best interest, potentially violating OCGA. Section 43-40-20. Suggesting an investment strategy that the licensee has limited knowledge about, without recommending the client seek advice from a qualified financial advisor or specialist, is professionally unacceptable. This could lead to inadequate or misleading advice, potentially breaching the duty of care and exposing both the client and the licensee to risk, and may fall under the purview of OCGA. Section 43-40-25b. 1. If it constitutes dishonest dealing. The professional decision-making process for similar situations should involve 1. Actively listening to and understanding the client's stated objectives, financial situation, and risk tolerance. 2. providing a clear, unbiased overview of the relevant real estate investment types, including their typical characteristics, potential benefits, and inherent risks, tailored to the client's understanding. 3. Facilitating a discussion where the client can articulate their preferences and concerns regarding each option. 4. Recommending the strategy that best aligns with the client's profile, while clearly stating any limitations of the licensee's advisory capacity and suggesting consultation with other professionals, e.g., financial planners, tax advisors, if the investment strategy extends beyond the licensee's expertise. 5. Documenting the advice provided and the client's decisions. Question 2. Governance review demonstrates that a Georgia real estate broker is advising a long-time client who wishes to retain a property they inherited, believing it to be a valuable investment. The client expresses a strong emotional attachment to the property and is convinced it will appreciate significantly in value. The broker, however, has observed declining rental demand in the area and increasing property maintenance costs. What is the most appropriate course of action for the Georgia broker to take regarding the property's investment potential? Option A. Immediately recommend selling the property to capitalize on any perceived equity without a detailed analysis to avoid potential future losses the client might incur. Option B. Conduct a comprehensive investment analysis, including current market rental rates, projected operating expenses, and comparable property sales in the Georgia market, and present these objective findings to the client, discussing both potential upside and downside risks. Option C. Focus the discussion solely on the potential for future appreciation, downplaying current market challenges and maintenance costs to maintain the client's positive sentiment. Option D. Advise the client to hold onto the property, emphasizing its sentimental value and assuring them that it will likely appreciate in value over time, aligning with the client's optimistic outlook. The correct answer is B. Conduct a comprehensive investment analysis, including current market rental rates, projected operating expenses, and comparable property sales in the Georgia market, and present these objective findings to the client, discussing both potential upside and downside risks. Explanation. Scenario analysis. This scenario presents a professional challenge for a Georgia real estate broker due to the inherent subjectivity in valuing investment properties and the potential for misrepresentation. A broker must navigate the client's emotional attachment and financial expectations while adhering to ethical duties and Georgia real estate law, specifically the Georgia Real Estate Commission's rules and regulations. The broker's advice directly impacts the client's financial well-being, making accurate and unbiased analysis paramount. Correct approach analysis. The best professional approach involves a comprehensive, data-driven analysis of the property's investment potential, focusing on objective metrics and market comparables relevant to Georgia real estate. This includes a thorough review of the property's current condition, potential for renovation or improvement, projected rental income based on current market rates for similar properties in the specific Georgia locale, and anticipated operating expenses. The broker should then present this objective analysis to the client, clearly outlining the potential risks and rewards associated with holding the property as an investment, without injecting personal opinions or emotional biases. This aligns with the Georgia Real Estate Commission's emphasis on honesty, integrity, and competent service, requiring brokers to possess sufficient knowledge to advise clients accurately. Incorrect approach is analysis. One incorrect approach is to solely rely on the client's perceived market value or emotional attachment to the property. This fails to meet the broker's fiduciary duty to provide objective advice and could lead to the client making a financially detrimental decision. Violates the principle of acting in the client's best interest, as mandated by Georgia real estate law, which requires brokers to be truthful and avoid misrepresentation. Another incorrect approach is to present a highly optimistic projection of future returns without substantiating it with current market data or realistic expense forecasts. This constitutes a form of misrepresentation, as it creates an unrealistic expectation for the client. Georgia real estate regulations prohibit brokers from making false promises or misrepresenting facts that could influence a client's decision. A third incorrect approach is to dismiss the client's concerns about the property's investment viability and push for a sale without conducting a thorough analysis. This demonstrates a lack of due diligence and a failure to adequately advise the client on all available options. Brokers are expected to provide informed counsel, not to pressure clients into transactions that may not align with their investment goals. Professional reasoning. Professionals should approach investment analysis by prioritizing objective data and market realities over subjective opinions or client emotions. The decision-making process should involve 1. Understanding the client's investment goals and risk tolerance. 2. Conducting thorough due diligence on the property, including market research and financial projections based on verifiable data. 3. Presenting a balanced analysis that includes both potential benefits and risks. 4. Educating the client on the findings and empowering them to make an informed decision. This systematic approach ensures compliance with ethical standards and legal obligations in Georgia. Question 3. Governance review demonstrates that a licensed real estate broker in Georgia has allowed their license to expire due to an oversight in tracking renewal deadlines and continuing education requirements. The broker now wishes to reactivate their license and continue practicing. Which of the following actions represents the most appropriate and compliant path forward according to Georgia's real estate licensing laws and regulations? Option A. Take any available real estate courses that seem relevant to refresh knowledge and then submit a standard license renewal application, hoping the commission will overlook the lapse. Option B. Apply for new real estate license as if they were a first-time applicant and disregard the previous expired license and any continuing education that may have been previously completed. Option C. Immediately enroll in and complete the full 36 hours of continuing education, ensuring the Georgia Licensed Law course is included, and submit a reactivation application with proof of completion and any applicable fees to the Georgia Real Estate Commission. Option D. Contact the Georgia Real Estate Commission to request a waiver for the expired license and continuing education requirements, explaining the personal circumstances that led to the oversight. The correct answer is C. Immediately enroll in and complete the full 36 hours of continuing education, ensuring the Georgia Licensed Law course is included, and submit a reactivation application with proof of completion and any applicable fees to the Georgia Real Estate Commission. Explanation. Scenario analysis. This scenario presents a common challenge for real estate licensees in Georgia, maintaining compliance with licensing and continuing education requirements while managing a busy professional life. The challenge lies in accurately interpreting the Georgia Real Estate Commission's (GREC) regulations regarding license renewal and the specific continuing education (C) mandates. Failure to adhere to these requirements can lead to license suspension, fines, and damage to professional reputation. Careful judgment is required to ensure all obligations are met proactively. Correct approach analysis. The best professional practice involves proactively tracking license expiration dates and the status of continuing education credits well in advance of the renewal deadline. This approach ensures that a licensee has ample time to complete required coursework, address any unforeseen issues with course providers or credit reporting, and submit the renewal application without last-minute stress or potential noncompliance. Specifically, Georgia law requires licensees to complete 36 hours of approved continuing education every 4 years, with at least 6 hours completed each year, and specific topics like the Georgia Licensed Law course must be included. Proactively managing this ensures all statutory requirements are met, demonstrating a commitment to professional development and regulatory adherence as mandated by the GREC. Incorrect approach is analysis. One incorrect approach involves waiting until the license expiration month to begin fulfilling continuing education requirements. This is problematic because it leaves no buffer for unexpected delays, such as course availability issues, technical difficulties with online platforms, or the GREC processing times for credit reporting. It significantly increases the risk of missing the renewal deadline or submitting an incomplete application, which could result in penalties or the inability to practice real estate. This approach fails to align with the spirit of continuous professional development and the GREC intent to ensure licensees remain current. Another incorrect approach is assuming that any real estate-related course taken will automatically count towards the Georgia continuing education requirement. Georgia law specifies that CE courses must be approved by the GREC. Taking unapproved courses, even if they seem relevant, will not satisfy the requirement and could lead to a license renewal being rejected. This demonstrates a lack of diligence in understanding the specific regulatory framework governing CE in Georgia and a failure to verify course accreditation. A third incorrect approach is to only complete the minimum required hours without considering the specific topic requirements or the renewal cycle. For example, not completing the mandatory Georgia license law course within the 4-year cycle, or failing to spread the required hours across the years would be a violation. This approach overlooks the GREC-specific mandates for content and distribution of CE, risking noncompliance even if the total hour count is met. It shows a superficial understanding of the renewal obligations. Professional reasoning. Professionals should adopt a proactive and systematic approach to license and continuing education management. This involves creating a personal renewal calendar that tracks license expiration dates and CE deadlines, regularly reviewing the GREC official website for updates on licensing and CE requirements is crucial. When selecting CE courses, licensees should always verify their GREC approval and ensure they cover the mandated topics. Maintaining meticulous records of completed courses and certificates of completion is also essential for audit purposes. This disciplined approach fosters ongoing compliance and upholds professional integrity. Question 4. Governance review demonstrates that a real estate licensee in Georgia is representing a seller whose family has occupied a property for generations. The seller, who has been paying property taxes and maintaining the home, wishes to sell the property. However, the licensee discovers through preliminary title inquiries that the original deed granted the property to the seller's mother for her lifetime, with the remainder to the seller's siblings upon her death. The seller believes they have the right to sell the entire property outright. What is the most appropriate course of action for the licensee? Option A. Focus solely on marketing the property's features and price, leaving the complexities of ownership to be resolved by the buyer and seller after the contract is signed. Option B. Advise the seller that they likely only possess a life estate and that the remainder interest belongs to their siblings, and recommend that all parties consult with an attorney to clarify ownership and facilitate a sale that respects all vested interests. Option C. Proceed with listing and marketing the property based on the seller's belief of full ownership, as they have been paying taxes and maintaining the property, and assume the siblings will agree to the sale later. Option D. Inform the seller that they have clear title because they are currently in possession and paying taxes, and proceed with the sale as instructed by the seller. The correct answer is B. Advise the seller that they likely only possess a life estate and that the remainder interest belongs to their siblings, and recommend that all parties consult with an attorney to clarify ownership and facilitate a sale that respects all vested interests. Explanation. This scenario presents a professional challenge due to the potential for conflicting property rights and the need for a real estate licensee to navigate these complexities ethically and legally within Georgia law. The licensee must ensure all parties understand the nature of the ownership interests involved before a transaction can proceed, avoiding misrepresentation or facilitating a sale that could lead to future disputes. The best approach involves clearly identifying and documenting the exact nature of the property rights held by each party. This means understanding the distinction between fee simple ownership, life estates, remainders, or any other form of co-ownership or limited interest that might exist. In Georgia, real estate licensees are bound by the Georgia Real Estate License Law and the rules and regulations of the Georgia Real Estate Commission. These regulations mandate honesty, fair dealing, and the disclosure of all material facts. A licensee must ensure that all parties to a transaction are fully informed about the title and any encumbrances or limitations on ownership. This includes advising parties to seek independent legal counsel to clarify complex ownership structures. An incorrect approach would be to assume that because one party is in possession or paying taxes, they have full fee simple ownership. This ignores the possibility of other vested interests, such as a life estate where the current occupant has the right to use and enjoy the property during their lifetime, but the remainder interest belongs to another party. Facilitating a sale based on this assumption would violate the duty of disclosure and could lead to a breach of contract and potential legal action against the licensee for misrepresentation. Another incorrect approach is to proceed with marketing and selling the property without a clear understanding of the title. This demonstrates a failure to conduct due diligence and a disregard for the legal framework governing property transactions in Georgia. The licensee has a responsibility to ensure the property can be legally conveyed and that all parties understand what they are buying or selling. A further incorrect approach would be to rely solely on the seller's verbal assertion of ownership, without verifying the title through a title search or abstract. While a seller may believe they have clear title, legal ownership is determined by recorded deeds and other legal instruments. A licensee's duty extends beyond accepting a seller's word and requires active verification of material facts. Professionals should employ a decision-making framework that prioritizes due diligence, transparency, and adherence to legal and ethical standards. This involves 1. Thoroughly investigating the property's title history. 2. Identifying all parties with a legal interest in the property. 3. Clearly communicating the nature of these interests to all potential buyers and sellers. 4. Recommending independent legal counsel for parties to review complex ownership structures. 5. Ensuring all disclosures are made in writing and are accurate. Question 5. Stakeholder feedback indicates that a real estate licensee in Georgia is representing a buyer interested in purchasing a property for the purpose of operating a small, home-based graphic design business. The seller's listing agent mentioned that the property is zoned for residential use, but suggested that operating a home-based business is generally permitted. The buyer is eager to proceed with the purchase, assuming this informal assurance is sufficient. What is the most appropriate course of action for the licensee to ensure compliance with Georgia's zoning laws and land use regulations, and to protect the buyer's interests? Option A. Relay the seller's agent's statement to the buyer, advising them that home-based businesses are typically allowed in residential zones and that they should proceed with the purchase. Option B. Inform the buyer that zoning regulations are the buyer's sole responsibility to investigate and that the licensee has no obligation to provide information or guidance on this matter. Option C. Advise the buyer that they can likely obtain a variance or special use permit for their home-based business after closing, as this is a common practice. Option D. Independently verify the property's current zoning classification and research the specific local ordinances of the municipality governing home-based businesses to confirm if the buyer's intended use is permitted and under what conditions. The correct answer is D. Independently verify the property's current zoning classification and research the specific local ordinances of the municipality governing home-based businesses to confirm if the buyer's intended use is permitted and under what conditions. Explanation. This scenario presents a professional challenge because it requires a real estate licensee to navigate potentially conflicting information regarding zoning regulations and a client's intended use of a property. The licensee must act with diligence and honesty, ensuring the client is fully informed about any limitations that could impact their investment and future plans. Failure to do so could lead to significant financial loss for the client and potential liability for the licensee. The best approach involves proactively verifying the zoning classification and its implications for the client's specific intended use. This means the licensee should not rely solely on the seller's or listing agent's informal statements. Instead, they should consult official sources, such as the local municipality's planning and zoning department, or review the official zoning ordinance for the property's address. This approach is correct because it aligns with the Georgia Real Estate Commission's (GREC) requirements for licensees to exercise reasonable care and diligence, and to disclose all material facts known or reasonably discoverable. Specifically, Georgia law mandates that licensees must disclose any known material defects or limitations affecting the property, and zoning restrictions are considered material facts. By independently verifying the zoning, the licensee fulfills their fiduciary duty to the client and adheres to ethical standards by providing accurate and complete information. An incorrect approach would be to simply relay the seller's or listing agent's assurance that the property is suitable for a home-based business without independent verification. This is professionally unacceptable because it places undue reliance on potentially inaccurate or incomplete information. The licensee has a duty to investigate and disclose, not merely to pass along information without due diligence. This could violate GREC regulations regarding misrepresentation and failure to disclose material facts. Another incorrect approach would be to advise the client that they can likely obtain a variance or special use permit after the purchase, without first confirming the current zoning and the likelihood of such a permit being granted. This is problematic because it involves speculation rather than factual disclosure. The licensee is not qualified to guarantee the outcome of a zoning variance application, and offering such advice could be construed as providing legal or planning advice, which is outside the scope of a real estate license. It also fails to disclose the current zoning limitations upfront. Finally, an incorrect approach would be to inform the client that zoning is a matter for the buyer to investigate independently, and that the licensee has no responsibility in this regard. This is a failure to exercise reasonable care and diligence. While buyers do have a responsibility to conduct their due diligence, licensees have an affirmative duty to disclose no material facts and to investigate reasonably discoverable information that could affect the property's value or usability for the client's stated purpose. Professionals should employ a decision-making framework that prioritizes client interests and regulatory compliance. This involves active listening to understand the client's needs, proactive investigation of all material aspects of a property, diligent disclosure of findings, and seeking clarification from appropriate authorities when necessary. When dealing with zoning and land use, licensees must consult official sources and communicate any potential restrictions or requirements clearly and accurately to their clients. Question 6. Stakeholder feedback indicates that some Georgia real estate brokers are hesitant to advise sellers on price reductions during a market downturn, fearing client dissatisfaction. A broker is representing a seller who insists on listing their home at a price significantly above current market value, based on past sales from a year ago. What is the most professionally responsible and legally compliant approach for the Georgia broker in this situation? Option A. Advise the seller that the market is too difficult to sell in and suggest they wait an indefinite period before listing their property without providing specific data or alternative strategies. Option B. Agree to list the property at the seller's desired price and hope that a buyer will eventually emerge who is willing to pay that amount without further discussion of market data. Option C. Present the seller with a detailed comparative market analysis, CMA, that reflects current market conditions, including recent sales of comparable properties and average days on market, and collaboratively discuss pricing strategies that align with these realities, even if it means adjusting the seller's initial expectations. Option D. Immediately suggest a drastic price reduction to a level significantly below the seller's expectation, without fully explaining the market data or exploring other marketing adjustments. The correct answer is C. Present the seller with a detailed comparative market analysis, CMA, that reflects current market conditions, including recent sales of comparable properties and average days on market, and collaboratively discuss pricing strategies that align with these realities, even if it means adjusting the seller's initial expectations. Explanation. This scenario presents a professional challenge because a real estate agent must navigate a declining market while upholding their fiduciary duties to their clients. The agent needs to balance providing realistic advice with maintaining client confidence and achieving the best possible outcome for their seller, all within the regulatory framework of Georgia real estate law. Careful judgment is required to avoid misrepresentation or negligence. The best approach involves proactively educating the seller about the current market realities and presenting a data-driven strategy for pricing and marketing. This includes providing comparative market analysis, CMA data, that reflects recent sales of similar properties in the area, highlighting any downward trends in prices or increased days on market. The agent should then collaboratively develop a pricing strategy that aligns with market conditions, even if it means adjusting the seller's initial expectations. This approach is correct because it aligns with the Georgia real estate license law, specifically the requirements for agents to act in the best interest of their clients, to be competent and knowledgeable, and to avoid misrepresentation. Ethical practice dictates transparency and honest advice, even when it's difficult news for the client. An incorrect approach would be to agree to list the property at the seller's inflated price without providing objective market data or discussing the implications of an unrealistic price. This fails to uphold the agent's duty of competence and honesty, potentially leading to the property sitting on the market, incurring further costs for the seller, and damaging the agent's reputation. It also violates the principle of avoiding misrepresentation by implicitly agreeing to a price that is not supported by market data. Another incorrect approach would be to pressure the seller into accepting a significantly lower price than they are comfortable with, without adequately explaining the rationale or exploring alternative marketing strategies. While aiming for a sale is important, forcing a price reduction without proper justification or client buy-in can be seen as coercive and may not align with the seller's ultimate goals or financial needs. This could also be viewed as a failure to adequately represent the seller's interests. A further incorrect approach would be to avoid discussing the market downturn altogether and simply continue with the original marketing plan as if the market were still robust. This demonstrates a lack of market awareness and competence, failing to provide the seller with the necessary information to make informed decisions. It also neglects the agent's duty to advise the client on factors affecting the sale of their property. The professional reasoning process for similar situations should involve a commitment to continuous market analysis, transparent communication with clients, and the ability to deliver difficult news with empathy and factual support. Agents should always prioritize their fiduciary duties, ensuring that their advice is grounded in objective data and aligns with the client's best interests and legal obligations. Question 7. Benchmark analysis indicates that a Georgia real estate broker is representing a buyer interested in a property with a history of agricultural use. The broker is aware that such properties can sometimes have residual environmental impacts from past pesticide or herbicide use. What is the most responsible and legally compliant approach for the broker to take in this situation? Option A. Inform the buyer that agricultural history is common and unlikely to pose significant problems, downplaying any potential environmental concerns to facilitate the sale. Option B. Assume that since the seller has not disclosed any environmental issues, there are none, and proceed with the transaction without further inquiry. Option C. Rely solely on the seller's verbal representation that the property is free of any environmental contamination and proceed with the transaction. Option D. Advise the buyer that properties with agricultural history may have environmental considerations and recommend they obtain a professional environmental assessment to identify any potential risks. The correct answer is D. Advise the buyer that properties with agricultural history may have environmental considerations and recommend they obtain a professional environmental assessment to identify any potential risks. Explanation. Scenario analysis. This scenario presents a professional challenge for a Georgia real estate broker due to the potential for undisclosed environmental hazards to significantly impact property value, buyer decision, and expose the broker to legal liability. Georgia law, like many jurisdictions, places a duty on licensees to disclose known material defects, and environmental concerns can certainly fall into this category. The broker must navigate the complexities of identifying potential issues, understanding their implications, and ensuring compliance with disclosure obligations without overstepping professional boundaries or providing unqualified opinions. The challenge lies in balancing the duty to inform with the need for accurate, legally sound information. Correct approach analysis. The best professional approach involves diligently investigating and disclosing known environmental concerns that could affect the property's value or desirability. This means actively inquiring about any past environmental issues, reviewing available documentation, and if red flags are raised, recommending that the buyer obtain professional environmental assessments. This approach aligns with Georgia's Real Estate Commission's emphasis on licensee honesty and fair dealing, as well as the general duty to disclose known material facts that could influence a buyer's decision. It protects the buyer by ensuring they are informed and empowers them to make educated decisions, while also safeguarding the broker by demonstrating due diligence and adherence to disclosure requirements. Incorrect approach is analysis. Ignoring potential environmental issues or assuming they are not material simply because they are not immediately obvious is a significant ethical and regulatory failure. This approach violates the duty of honesty and fair dealing by withholding information that could materially affect the property's value or the buyer's decision-making. It exposes the broker to potential lawsuits from the buyer for misrepresentation or failure to disclose. Minimizing or downplaying known environmental concerns to avoid jeopardizing a sale is also professionally unacceptable. This constitutes a form of misrepresentation and a breach of fiduciary duty. Georgia law requires full and truthful disclosure of all known material facts, and attempting to obscure or diminish the impact of an environmental issue is a direct violation of this principle. Relying solely on the seller's verbal assurances without any independent verification or recommending professional assessment when warranted is another problematic approach. While sellers are obligated to disclose known defects, brokers have their own independent duty to investigate and disclose. if a broker has reason to believe an environmental issue exists. They cannot simply pass the buck to the seller without further action. This can lead to the broker being held liable if the seller's assurances prove to be inaccurate or incomplete. Professional reasoning. Professionals in Georgia should adopt a proactive and transparent approach to environmental considerations in real estate transactions. This involves 1. Educating themselves on common environmental concerns relevant to Georgia properties. 2. Asking pertinent questions of sellers and buyers regarding any known environmental history. 3. Reviewing property disclosures and any available environmental reports. 4. Recommending independent professional environmental assessments when there is a reasonable suspicion of a material environmental defect. 5. Documenting all inquiries, disclosures, and recommendations made to clients. This systematic process ensures compliance with Georgia's licensing laws and ethical standards, while prioritizing the informed decision-making of all parties involved. Question 8. Market research demonstrates that a growing number of prospective homebuyers in Georgia are interested in exploring financing options beyond traditional bank mortgages, including seller financing and specialized loan programs. A Georgia real estate broker is assisting a client who has expressed interest in these alternative financing methods. What is the most appropriate course of action for the broker to ensure compliance with Georgia's real estate regulations and ethical standards? Option A. Offer to negotiate loan terms directly with the seller on behalf of the client for seller financing, and provide an opinion on the client's likelihood of loan approval based on their stated income and credit history. Option B. Accept a referral fee from a mortgage lender for introducing the client, ensuring the client is aware that the broker is receiving compensation from the lender for the referral. Option C. Educate the client on the general characteristics and potential implications of various financing options available in Georgia, such as seller financing, FHA loans, and conventional mortgages, while strongly advising the client to consult with a licensed mortgage lender and an attorney for specific advice and to secure the loan. Option D. Recommend a specific mortgage lender to the client and assist in completing the loan application, explaining that this will streamline the financing process and ensure the client gets the best available terms. The correct answer is C. Educate the client on the general characteristics and potential implications of various financing options available in Georgia, such as seller financing, FHA loans, and conventional mortgages, while strongly advising the client to consult with a licensed mortgage lender and an attorney for specific advice and to secure the loan. Explanation. Market research demonstrates that a significant portion of potential homebuyers in Georgia are seeking financing options that extend beyond traditional mortgages. This scenario presents a professional challenge for a Georgia real estate broker because it requires navigating the complexities of various financing methods while adhering strictly to Georgia's real estate licensing laws and ethical guidelines. The broker must ensure that any advice or facilitation provided is legally compliant and in the best interest of the client, avoiding any actions that could be construed as unlicensed lending or offering legal advice. The correct approach involves the Georgia broker acting as a facilitator and educator, connecting clients with licensed mortgage lenders, and explaining the general characteristics and potential benefits of different financing options available in Georgia, such as FHA loans, VA loans, conventional loans, and seller financing, without recommending a specific product or lender. The broker should emphasize the importance of the client consulting with a qualified mortgage professional and legal counsel to make informed decisions. This aligns with Georgia Real Estate Commission rules that permit brokers to assist buyers in obtaining financing by referring them to licensed lenders and providing general information about financing types, but prohibit them from engaging in activities that require a mortgage broker license or the practice of law. An incorrect approach would be for the Georgia broker to actively advise a client on which specific type of loan is best for their situation, or to negotiate loan terms directly with a lender on behalf of the client. This could be interpreted as engaging in activities that require a mortgage broker license in Georgia, which a real estate broker's license does not automatically grant. Such actions could lead to disciplinary action from the Georgia Real Estate Commission and potential legal liabilities. Another incorrect approach would be for the broker to explain the intricacies of loan underwriting processes or to provide opinions on a client's creditworthiness in relation to loan approval. This ventures into the territory of providing financial advice or acting as a loan originator, both of which are regulated activities requiring specific licenses and certifications beyond a real estate broker's license in Georgia. This could also be seen as practicing law or providing financial services without proper authorization. A final incorrect approach would be for the Georgia broker to accept a referral fee from a mortgage lender for directing a client to them. While some states permit such arrangements under specific disclosure requirements, Georgia law generally prohibits real estate licensees from receiving compensation from lenders for referring clients, as this can create a conflict of interest and compromise the broker's fiduciary duty to the client. Professionals should approach such situations by prioritizing client education and connection with licensed professionals. A decision-making framework would involve first understanding the client's general financing needs, then identifying the types of financing that might be relevant, and finally, facilitating connections with licensed mortgage brokers or lenders who can provide expert advice and services. Throughout this process, the broker must maintain a clear understanding of the boundaries of their license and ethical obligations under Georgia law, always acting in the client's best interest and avoiding any actions that could be construed as unlicensed activity. Question 9. Stakeholder feedback indicates that some Georgia real estate brokers are struggling with accurately classifying properties for listing purposes, particularly when a property might have characteristics of multiple types. A broker is representing a seller in rural Georgia who owns a large tract of land with a small, dilapidated farmhouse and extensive wooded areas suitable for timber harvesting. The seller wishes to list it as a residential property to attract a broader buyer base. What is the most appropriate course of action for the Georgia broker? Option A. Market the property as commercial because the seller is open to various uses and the land is extensive, even though there is no current commercial activity or zoning for it. Option B. Advise the seller that while the property has a farmhouse, its primary characteristics and potential use lean towards agricultural or timberland, and the listing should accurately reflect this, potentially marketing it as a rural estate with agricultural potential after verifying zoning. Option C. List the property as residential as requested by the seller, assuming that the presence of a dwelling makes it primarily residential, regardless of other features. Option D. Classify the property based on the most prominent physical feature, which is the wooded area, and list it as timberland without further investigation into zoning or the seller's intent. The correct answer is B. Advise the seller that while the property has a farmhouse, its primary characteristics and potential use lean towards agricultural or timberland, and the listing should accurately reflect this, potentially marketing it as a rural estate with agricultural potential after verifying zoning. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a broker to accurately identify and advise on the appropriate classification of a property for listing purposes, directly impacting marketing strategies, potential buyer pools, and compliance with Georgia real estate licensing laws. Misclassifying a property can lead to significant legal and ethical repercussions, including misrepresentation claims and potential disciplinary action by the Georgia Real Estate Commission. Careful judgment is required to balance the seller's desires with the objective realities of the property's use and zoning. Correct approach analysis. The best professional practice involves a thorough assessment of the property's current use, physical characteristics, and applicable zoning regulations in Georgia. This approach prioritizes accuracy and compliance. By consulting official zoning maps and ordinances, and potentially advising the seller to seek professional assessments if ambiguity exists, broker ensures the property is marketed under its most accurate and legally permissible classification. This aligns with the Georgia Real Estate Commission's emphasis on honesty, integrity, and avoiding misrepresentation in all dealings. Incorrect approaches analysis. Marketing the property solely based on the seller's desired classification without verifying its actual use or zoning is a failure to exercise due diligence and constitutes potential misrepresentation. This approach disregards the legal framework governing property types in Georgia and can mislead potential buyers. Similarly, classifying the property based on a single, prominent feature without considering its entirety or zoning is an incomplete and potentially misleading practice. Finally, assuming a classification based on a neighboring property's use is speculative and not grounded in the specific property's characteristics or legal status, violating the duty of accurate representation. Professional reasoning. Professionals should always begin by understanding the client's objectives, but must then independently verify all material facts about the property. This includes researching local zoning laws and ordinances, physically inspecting the property, and understanding its primary use. When there is any doubt or ambiguity, seeking clarification from the seller, relevant authorities, or other qualified professionals is essential. The broker's primary duty is to represent the property accurately and ethically, adhering strictly to Georgia's real estate laws and regulations. Question 10. The risk matrix shows a moderate probability of a significant financial loss due to an inaccurate property valuation. A seller in Atlanta, Georgia, has listed their property for $500,000, stating that this is the absolute minimum they will accept. The licensee has conducted a comparative market analysis, CMA, which suggests a probable selling range of $475,000 to $515,000, but the licensee is aware of recent sales of comparable properties that closed between $450,000 and $465,000, though these properties had slightly fewer amenities. The licensee is under pressure from the seller to list the property at the higher end of the seller's expectation to attract more buyers initially. What is the most appropriate course of action for the Georgia real estate licensee? Option A. Advise the seller that while the asking price is $500,000, a professional appraisal should be obtained to establish a more definitive market value, and present the CMA with clear disclaimers about its limitations and the range of recent comparable sales, including those below the asking price. Option B. Agree to list the property at $500,000 and assure the seller that the market will ultimately determine the true value, without further discussion of the lower comparable sales or the need for an appraisal. Option C. List the property at $500,000 and focus marketing efforts on the seller's stated price, downplaying the lower comparable sales in the CMA. Option D. Prepare a CMA that emphasizes the higher end of the potential selling range, $515,000, by selectively highlighting comparable sales that support this figure, and present this as the likely market value. The correct answer is A. Advise the seller that while the asking price is $500,000, a professional appraisal should be obtained to establish a more definitive market value, and present the CMA with clear disclaimers about its limitations and the range of recent comparable sales, including those below the asking price. Explanation. The risk matrix shows a moderate probability of a significant financial loss due to an inaccurate property valuation. This scenario is professionally challenging because it requires a real estate licensee in Georgia to balance their fiduciary duty to their client with the legal and ethical obligations surrounding accurate property representation and fair dealing. Misrepresenting a property's value can lead to legal disputes, disciplinary action from the Georgia Real Estate Commission, GREC, and damage to the licensee's reputation. Careful judgment is required to ensure that all valuations are supported by sound appraisal principles and are presented transparently. The best professional practice involves obtaining an independent professional appraisal. This approach is correct because Georgia law, specifically the Georgia Real Estate License Law, OCGA, Title 43, Chapter 40, mandates that licensees must not mislead or deceive any party in a real estate transaction. While licensees can provide comparative market analyses, CMA, these are estimates and not formal appraisals. Relying on a professional appraisal provides an objective, defensible valuation that mitigates the risk of misrepresentation and fulfills the licensee's duty of care. It also aligns with ethical standards that prioritize client interests and honest dealing. An approach that relies solely on the seller's stated asking price for the property, without independent verification, is professionally unacceptable. This fails to uphold the duty of care and can lead to misrepresentation if the asking price is inflated. It directly contravenes the principle of fair dealing and the prohibition against misleading parties, as per the Georgia Real Estate License Law. Another unacceptable approach is to use a CMA that heavily favors recent sales of properties with significantly different features or in vastly different neighborhoods, simply to justify a higher potential sale price. This demonstrates a lack of professional integrity and a failure to conduct a thorough and objective market analysis. Such a practice can be seen as an attempt to manipulate the perceived value, which is a violation of ethical standards and potentially the license law's anti-fraud provisions. Finally, an approach that involves presenting a range of potential sale prices without clearly indicating the methodology or the level of certainty associated with each figure is also professionally unsound. While a range might be part of a CMA, it must be presented with transparency and context. Failing to do so can lead to a buyer or seller making decisions based on incomplete or misleading information, thereby violating the licensee's duty to act with honesty and integrity. Professionals should employ a decision-making framework that prioritizes accuracy, transparency, and adherence to legal and ethical standards. This involves 1. Understanding the client's needs and the transaction's context. 2. Gathering all relevant data, including property specifics and market conditions. 3. Employing appropriate valuation methods, recognizing the limitations of each, e.g., CMA vs. appraisal. 4. Presenting findings clearly and honestly, disclosing any assumptions or limitations. 5. Seeking professional expertise, like an appraiser, when the situation warrants it or when the licensee's expertise is insufficient to ensure accuracy and mitigate risk. Question 11. The control framework reveals that a Georgia real estate broker is representing a commercial tenant whose 5-year lease agreement is nearing its expiration date. The lease contains a clause stating that the tenant must provide written notice of their intent to renew the lease no less than 120 days prior to the expiration date. The tenant has had a verbal conversation with the landlord's representative expressing their desire to renew, and the landlord's representative verbally indicated that it would be fine. The tenant has not submitted any written notice. What is the most appropriate course of action for the Georgia broker to advise the tenant? Option A. Advise the tenant to cease paying rent and vacate the premises, as the lease will expire without further action. Option B. Advise the tenant that their verbal agreement with the landlord's representative is sufficient for renewal, as the landlord verbally agreed. Option C. Advise the tenant that their continued occupancy of the property after the lease expiration will automatically renew the lease on a month-to-month basis. Option D. Advise the tenant to immediately submit a written notice of renewal to the landlord, referencing the lease's renewal clause and the verbal confirmation received, to ensure compliance with the lease terms and Georgia law. The correct answer is D. Advise the tenant to immediately submit a written notice of renewal to the landlord, referencing the lease's renewal clause and the verbal confirmation received, to ensure compliance with the lease terms and Georgia law. Explanation. The control framework reveals a scenario where a real estate broker in Georgia must navigate the complexities of lease agreements, specifically concerning the duration and renewal terms of a commercial lease. The situation is professionally challenging because it requires a thorough understanding of Georgia's landlord-tenant laws and the specific clauses within the lease agreement itself. Misinterpreting these terms can lead to significant legal disputes, financial losses for both the landlord and tenant, and potential disciplinary action against the broker. Careful judgment is required to ensure compliance and protect the interests of all parties involved. The best professional approach involves a meticulous review of the lease agreement's renewal clause in conjunction with Georgia law. This approach correctly identifies that the lease explicitly states a fixed term with a specific notice period for renewal. Georgia law, particularly concerning commercial leases, generally upholds the terms agreed upon by the parties in writing. Therefore, adhering strictly to the documented renewal procedure, which requires written notice within the specified timeframe, is the legally sound and ethically responsible course of action. This ensures that the tenant's right to renew is exercised according to the contract, and that the landlord is properly informed, preventing any ambiguity or potential disputes over the lease's continuation. An incorrect approach would be to assume that a verbal agreement to renew is sufficient. Georgia law, like most jurisdictions, requires significant contractual agreements, including lease renewals for commercial properties, to be in writing to be enforceable. Relying on a verbal conversation, even if seemingly clear, bypasses the statute of frauds and creates a high risk of legal challenge. This approach fails to uphold the integrity of written contracts and exposes both parties to uncertainty. Another incorrect approach would be to interpret the tenant's continued occupancy after the lease expiration as an automatic renewal. While some residential leases might have provisions for month-to-month continuation under specific circumstances, commercial leases typically require explicit renewal terms. Without a clear renewal clause or a new written agreement, continued occupancy can be construed as a holdover tenancy, which may not carry the same terms and conditions as the original lease and could be subject to different rental rates or termination conditions, as per Georgia law. This approach ignores the specific contractual obligations outlined in the lease. Finally, an incorrect approach would be to advise the tenant to simply stop paying rent and vacate, assuming the lease has expired without renewal. This action would likely be considered a breach of the lease agreement by the tenant, potentially leading to eviction proceedings and liability for unpaid rent and damages. It fails to consider the tenant's potential right to renew or the proper legal procedures for lease termination or non-renewal. The professional decision-making process for similar situations should begin with a comprehensive review of the executed lease agreement. This should be followed by an examination of relevant Georgia landlord-tenant statutes pertaining to commercial leases. If any clauses are ambiguous or raise questions, seeking clarification from legal counsel specializing in real estate law is paramount. Throughout the process, maintaining clear, written communication with all parties involved is essential to document all discussions and agreements, thereby minimizing the risk of disputes and ensuring compliance with all legal and ethical obligations. Question 12. The assessment process reveals that a Georgia real estate licensee is working with a first-time homebuyer who expresses a desire for predictable monthly payments for the foreseeable future, as they are concerned about unexpected increases in their housing costs. The licensee is aware of several mortgage products available, including fixed-rate, adjustable rate, and interest-only options. Which of the following represents the most appropriate course of action for the licensee in advising this client? Option A. Suggest an interest-only mortgage, explaining that it will allow for lower initial payments and focus on the potential for the client to build equity through property appreciation rather than principal repayment. Option B. Thoroughly explain the features, benefits, and risks of a fixed-rate mortgage, emphasizing its payment stability, and discuss how it aligns with the client's stated concern about predictable payments, while also briefly outlining the fundamental differences of adjustable rate and interest-only mortgages in terms of payment structure and risk. Option C. Strongly advocate for a fixed-rate mortgage as the only sensible option for a first-time homebuyer, without exploring the client's specific financial objectives or the nuances of other mortgage types. Option D. Recommend an adjustable rate mortgage with a low introductory rate, highlighting the immediate savings, and assure the client that rates are unlikely to rise significantly in the near future. The correct answer is B. Thoroughly explain the features, benefits, and risks of a fixed-rate mortgage, emphasizing its payment stability, and discuss how it aligns with the client's stated concern about predictable payments, while also briefly outlining the fundamental differences of adjustable rate and interest-only mortgages in terms of payment structure and risk. Explanation. The assessment process reveals a scenario that is professionally challenging due to the need to balance client financial goals with the inherent risks and complexities of different mortgage products. A Georgia real estate licensee must exercise careful judgment to ensure they are not only meeting client needs, but also adhering to Georgia's real estate licensing laws and ethical standards, particularly concerning disclosure and suitability. Misrepresenting or failing to adequately explain mortgage types can lead to significant client harm and regulatory repercussions. The correct approach involves a thorough needs assessment and clear, comprehensive explanation of mortgage options. This includes detailing the characteristics, benefits, and risks of fixed-rate, adjustable rate, and interest-only mortgages, tailored to the client's stated financial situation, risk tolerance, and long-term objectives. This approach is correct because it aligns with the Georgia Real Estate Commission's emphasis on licensee responsibility to act in the best interest of the client, which necessitates providing accurate and understandable information to enable informed decision-making. It also reflects ethical obligations to avoid misrepresentation and to ensure clients comprehend the financial commitments involved. An incorrect approach involves recommending an adjustable rate mortgage solely because it offers a lower initial interest rate without fully explaining the potential for future rate increases and payment volatility. This is professionally unacceptable because it prioritizes a short-term perceived benefit over the client's long-term financial stability and fails to adequately disclose material risks, potentially violating Georgia's laws against deceptive practices and the licensee's fiduciary duty. Another incorrect approach is to suggest an interest-only mortgage as a primary option, without a detailed discussion of how it differs from traditional principal and interest payments, and the significant risk of a large balloon payment at the end of the term, or the fact that the principal balance does not decrease. This is professionally unacceptable, as it omits crucial information about the repayment structure and the potential for a substantial financial burden, which could lead to default, and is a failure to provide adequate counsel regarding the product's implications. Finally, an incorrect approach is to steer the client towards a fixed-rate mortgage without exploring if other options might better suit their specific, stated financial goals, such as a desire for lower initial payments for a defined period. This is professionally unacceptable because it limits the client's choices based on the licensee's potentially biased preference rather than a comprehensive evaluation of the client's unique circumstances and stated objectives, thereby failing to act in the client's best interest. Professionals should employ a decision-making framework that prioritizes client education and informed consent. This involves actively listening to the client's financial situation, goals, and risk tolerance, then systematically explaining the features, advantages, and disadvantages of each relevant mortgage product. The licensee should document this discussion and the client's understanding and preferences. Question 13. Strategic planning requires a Georgia real estate broker to manage a situation where a seller, after signing a fully executed purchase and sale agreement, expresses a strong desire to withdraw their property from the market, citing personal reasons that are not explicitly covered by any contingencies in the contract. What is the broker's most appropriate course of action to uphold their professional and legal obligations? Option A. Contact the buyer directly to explain the seller's situation and attempt to negotiate a termination of the contract without further consultation with the seller or legal counsel. Option B. Advise the seller that they can simply refuse to proceed with the closing and that the contract is no longer valid because they have changed their mind. Option C. Immediately inform the buyer's agent of the seller's stated intention to withdraw, while also advising the seller that the executed purchase agreement is a legally binding document and that unilateral withdrawal may have consequences, and offer to facilitate communication or explore legally permissible termination options. Option D. Proceed with the transaction as planned without mentioning the seller's concerns to the buyer's agent, assuming the seller will eventually comply. Correct answer is C. Immediately inform the buyer's agent of the seller's stated intention to withdraw, while also advising the seller that the executed purchase agreement is a legally binding document and that unilateral withdrawal may have consequences, and offer to facilitate communication or explore legally permissible termination options. Explanation. Strategic planning requires a Georgia real estate broker to navigate complex contractual situations to ensure client interests are protected and legal compliance is maintained. This scenario is professionally challenging because it involves a potential conflict between a seller's stated desire to withdraw a property from the market and the existence of an active, legally binding purchase agreement. The broker must act with diligence and uphold their fiduciary duties to both parties, adhering strictly to Georgia real estate contract law and the Georgia Real Estate Commission's rules. The correct approach involves the broker immediately communicating with the seller to understand the basis of their desire to withdraw, while simultaneously informing the buyer's agent of the seller's stated intention and reiterating the binding nature of the executed purchase agreement. This approach is correct because it acknowledges the seller's expressed wishes while upholding the legal enforceability of the contract, which is a fundamental principle of real estate transactions in Georgia. The broker's duty is to facilitate the transaction as per the contract terms or to guide the parties through a legally permissible termination process, not to unilaterally declare a contract void. This aligns with the Georgia Real Estate Commission's emphasis on ethical conduct and adherence to contractual obligations. An incorrect approach would be for the broker to immediately advise the seller that they can simply withdraw the property from the market and void the contract without further consultation or consideration of the buyer's rights. This fails to recognize that a fully executed purchase agreement creates a binding contract under Georgia law, and unilateral withdrawal by the seller without the buyer's consent or a contractual provision allowing for it would likely constitute a breach of contract. This action would violate the broker's duty of loyalty and diligence to the buyer, who has a vested interest in the property under the terms of the agreement. Another incorrect approach would be for the broker to ignore the seller's request and proceed with the transaction as if nothing has changed, without addressing the seller's expressed concerns. This neglects the broker's fiduciary duty to communicate material information to their client and to address their client's concerns, even if those concerns are not legally grounds for terminating a contract. It also fails to proactively manage potential disputes and could lead to further complications. A further incorrect approach would be for the broker to unilaterally contact the buyer and attempt to negotiate a termination of the contract without first fully understanding the seller's motivations and without consulting with legal counsel if necessary. While communication with the buyer's agent is appropriate, initiating termination negotiations without a clear understanding of the seller's position and the contractual implications could be seen as overstepping the broker's authority and potentially creating liabilities for all parties involved. A professional decision-making process for similar situations should begin with a thorough understanding of the executed contract's terms and conditions, including any clauses related to termination or contingencies. The broker must then engage in open and honest communication with their client, the seller in this case, to ascertain the reasons behind their request. Simultaneously, the broker must inform the other party's agent of the situation, emphasizing the existing contractual obligations. If the seller's request is based on a misunderstanding or a desire to breach the contract, the broker should explain the legal ramifications and fiduciary duties involved. If there are legitimate contractual grounds for termination, or if a mutual agreement to terminate can be reached, the broker should facilitate that process, always prioritizing legal compliance and ethical conduct as guided by Georgia real estate law and the Georgia Real Estate Commission. Question 14. The audit findings indicate a pattern of agents within a Georgia real estate brokerage providing inconsistent and sometimes inaccurate information regarding the eligibility requirements and benefits of FHA, VA, and USDA loans. To address this, what is the most effective and compliant strategy for the brokerage to implement? Option A. Instruct agents to avoid discussing FHA, VA, and USDA loans with clients to prevent any potential for misinformation, and only refer clients to lenders without any preliminary explanation. Option B. Assume that general mortgage knowledge is sufficient for agents to discuss government-backed loans, relying on lenders to correct any client misunderstandings during the loan application process. Option C. Conduct mandatory, comprehensive training sessions for all agents on the specific characteristics, eligibility criteria, and common misconceptions associated with FHA, VA, and USDA loans, emphasizing accurate representation and the importance of referring clients to qualified mortgage lenders for definitive loan qualification. Option D. Delegate the entire responsibility of understanding and explaining government-backed loans to individual agents, expecting them to independently research and master these complex programs without formal brokerage guidance. The correct answer is C. Conduct mandatory, comprehensive training sessions for all agents on the specific characteristics, eligibility criteria, and common misconceptions associated with FHA, VA, and USDA loans, emphasizing accurate representation and the importance of referring clients to qualified mortgage lenders for definitive loan qualification. Explanation. The audit findings indicate a potential misinterpretation of government-backed loan programs, specifically FHA, VA, and USDA loans, within a Georgia real estate brokerage. This scenario is professionally challenging because it requires brokers and agents to possess accurate knowledge of these specialized loan types to guide clients effectively and compliantly. Misunderstanding these programs can lead to significant financial repercussions for borrowers, damage the brokerage's reputation, and result in regulatory penalties. Careful judgment is required to ensure all agents are properly trained and that client interactions adhere to both federal guidelines and Georgia's real estate laws. The best approach involves proactively educating all agents on the specific eligibility requirements, down payment rules, and appraisal standards for FHA, VA, and USDA loans, emphasizing that these programs are designed for specific borrower profiles and property types. This includes training on how to accurately represent these loan options to potential buyers without making guarantees or misrepresenting terms, and ensuring agents understand when to refer clients to qualified mortgage lenders for definitive guidance. This approach is correct because it directly addresses the identified knowledge gap, promotes ethical client representation, and aligns with the Georgia Real Estate Commission's expectations for licensee competency and consumer protection. It ensures agents are equipped to provide accurate, albeit general, information and to facilitate the correct process of connecting clients with appropriate lending professionals. An incorrect approach would be to assume that general mortgage knowledge is sufficient for government-backed loans. This fails to recognize the unique underwriting criteria and borrower qualifications inherent to FHA, VA, and USDA programs. It risks providing clients with misleading information, potentially leading them to believe they qualify for a loan they do not, or conversely, discouraging them from pursuing a loan they could obtain. This violates the ethical duty of competence and can lead to violations of federal lending regulations and Georgia's real estate licensing laws, which mandate truthful and accurate representation. Another incorrect approach is to delegate all responsibility for understanding these loan types solely to the mortgage lender, without providing agents with a foundational understanding. While lenders are the ultimate authority on loan approval, agents are often the first point of contact and are expected to offer initial guidance. A complete lack of agent knowledge means they cannot effectively screen potential buyers or explain the basic benefits and limitations of these loan programs, hindering the client's ability to make informed decisions early in the home buying process. This can be seen as a failure to adequately supervise and train licensees, which is a responsibility of the brokerage. Finally, an incorrect approach would be to discourage agents from discussing government-backed loans altogether, fearing misinformation. While caution is warranted, outright avoidance prevents clients who might benefit from these programs from learning about them. This limits client options and can be perceived as a failure to serve the client's best interests by not exploring all viable financing avenues. It also fails to equip agents with the knowledge to appropriately guide clients towards lenders specializing in these loan types. Professionals should adopt a decision-making framework that prioritizes continuous education and clear communication. This involves regular training sessions on specialized loan programs, developing clear internal guidelines for discussing financing options, and fostering a culture where agents feel empowered to ask questions and seek clarification. When faced with a scenario like this, the professional response is to identify the knowledge gap, implement targeted training, and establish protocols to ensure accurate client guidance and compliance with all relevant regulations. Question 15. The audit findings indicate that a Georgia-based mortgage brokerage firm has been consistently providing private mortgage insurance, PMI, disclosures to borrowers only after the loan has been underwritten and is approaching the closing table. This practice has raised concerns about the timeliness and completeness of borrower education regarding this significant loan cost. Which of the following represents the most appropriate and compliant approach for the brokerage to address this audit finding? Option A. Implement a policy to provide borrowers with a comprehensive written disclosure of PMI requirements, including estimated costs and cancellation conditions, within 3 business days of receiving their loan application. Option B. Rely on the lender to provide all necessary PMI disclosures to the borrower, as the lender ultimately manages the loan servicing. Option C. Continue to provide PMI disclosures as part of the closing documents, ensuring the lender is aware of the firm's standard practice. Option D. Inform borrowers about PMI verbally during the initial loan consultation, emphasizing that written details will be provided if the loan requires it. The correct answer is A. Implement a policy to provide borrowers with a comprehensive written disclosure of PMI requirements, including estimated costs and cancellation conditions, within 3 business days of receiving their loan application. Explanation. The audit findings indicate a potential lapse in compliance regarding the disclosure of private mortgage insurance, PMI, requirements to borrowers in Georgia. This scenario is professionally challenging because it requires a broker to balance efficient transaction processing with the absolute necessity of providing legally mandated disclosures. Failure to do so can result in significant legal repercussions, regulatory penalties, and damage to the brokerage reputation. Careful judgment is required to ensure that all disclosure obligations are met accurately and in a timely manner. Even when dealing with multiple loan applications and tight deadlines, the correct approach involves proactively educating borrowers about PMI at the earliest possible stage of the loan application process, ideally during the initial consultation or within the first 3 business days of receiving the loan application, as mandated by federal law, which Georgia real estate law aligns with for federally regulated loans. This approach ensures that borrowers understand the potential costs associated with their loan, allowing them to make informed decisions. Specifically, the broker should provide the borrower with a written disclosure detailing the conditions under which PMI will be required, the estimated cost of PMI, and the process for canceling PMI once the loan-to-value ratio reaches a certain threshold. This aligns with the spirit and letter of federal regulations like the Homeowners Protection Act of 1998, which Georgia brokers are expected to adhere to when originating loans subject to federal oversight. An incorrect approach involves waiting until the loan is nearing closing to inform the borrower about PMI. This is problematic because it deprives the borrower of crucial information early in the process, potentially leading to a feeling of being misled or blindsided. It also creates a risk that the borrower may not have sufficient time to explore alternative financing options or budget for the additional cost, potentially jeopardizing the closing. This approach fails to meet the spirit of timely disclosure and can be seen as a violation of good faith and fair dealing principles. Another incorrect approach is to only verbally inform the borrower about PMI without providing any written documentation. Verbal communication is a component of good practice. It is insufficient on its own. Regulations typically require written disclosures for significant loan terms. Relying solely on verbal communication leaves no verifiable record of the disclosure and makes it difficult for the borrower to refer back to the information. This can lead to disputes and misunderstandings, and it fails to meet the documentation requirements often implied or explicitly stated in real estate and lending regulations. A further incorrect approach is to assume that the lender will handle all PMI disclosures. While lenders have their own disclosure obligations, the mortgage broker also has a responsibility to ensure that the borrower is fully informed about all material aspects of the loan, including any associated insurance requirements that the broker is aware of or that are standard for the loan product being offered. Delegating this responsibility entirely to the lender without independent verification or proactive disclosure by the broker is a failure to uphold their duty to the client. The professional reasoning process for a mortgage broker in Georgia should involve a thorough understanding of all federal and state disclosure requirements related to mortgage lending. This includes not only the loan estimate and closing disclosure, but also specific disclosures related to private mortgage insurance. Brokers should implement a standardized checklist for each loan application to ensure that all necessary disclosures are provided at the appropriate times. When in doubt about a specific disclosure requirement, consulting with legal counsel or a compliance officer is a prudent step. The ultimate goal is to foster transparency and empower borrowers with the information they need to make sound financial decisions. Question 16. Quality control measures reveal that a Georgia real estate broker is advising an investor client on financing a commercial property acquisition. The investor is eager for a quick closing and has expressed interest in both hard money loans and seller financing. What is the most responsible and ethically sound approach for the broker to take in this situation? Option A. Recommend the hard money loan immediately, emphasizing its speed of funding, and defer detailed discussion of its terms and risks until after the loan is secured. Option B. Advise the investor to pursue seller financing, assuming the seller is amenable, without independently verifying the seller's legal capacity to offer financing or thoroughly reviewing the proposed loan terms with the investor. Option C. Focus the discussion solely on the potential benefits of each financing option, downplaying any associated risks to encourage the investor to make a decision quickly. Option D. Conduct a thorough discussion with the investor about the specific terms, risks, and repayment capabilities associated with both hard money loans and seller financing, ensuring the investor fully understands the implications before proceeding with either option. The correct answer is D. Conduct a thorough discussion with the investor about the specific terms, risks, and repayment capabilities associated with both hard money loans and seller financing, ensuring the investor fully understands the implications before proceeding with either option. Explanation. Scenario analysis. This scenario presents a professional challenge for a Georgia real estate broker because it involves advising a client on financing options that carry significant risks and require a thorough understanding of both the client's financial capacity and the specific terms of the loan. The broker must navigate the complexities of hard money loans and seller financing, ensuring the client fully comprehends the implications and that the broker acts within the bounds of Georgia real estate law and ethical obligations. Misrepresenting or failing to adequately disclose the nature of these financing methods can lead to severe legal and professional repercussions. Correct approach analysis. The best professional practice involves a comprehensive discussion with the investor about the specific terms, risks, and implications of both hard money loans and seller financing, tailored to their individual financial situation and investment goals. This includes clearly explaining the higher interest rates and shorter repayment terms typical of hard money loans, as well as the potential for foreclosure if payments are missed. For seller financing, it means detailing the repayment schedule, interest rate, any balloon payments, and the security interest the seller retains. The broker must ensure the investor understands these details and their ability to meet these obligations, and then facilitate the transaction with full disclosure to all parties, adhering to Georgia's Real Estate Commission rules regarding disclosure and fair dealing. This approach prioritizes informed consent and client protection, aligning with the broker's fiduciary duty and Georgia's regulatory framework for real estate professionals. Incorrect approaches analysis. Recommending a hard money loan solely because it offers quick funding without a detailed discussion of its high costs and short repayment period is professionally negligent. This fails to adequately inform the client of the significant risks, potentially leading to financial distress and default, which violates ethical obligations and Georgia disclosure requirements. Suggesting seller financing without verifying the seller's legal right to offer financing or ensuring proper documentation is in place is also problematic. This could lead to title issues and legal disputes, exposing both the client and the broker to liability. Presenting seller financing as a guaranteed solution without exploring the investor's ability to manage the repayment terms, especially if a balloon payment is involved, ignores the potential for default and subsequent loss of the property, which is an ethical breach. Professional reasoning. Professionals should approach financing discussions by first understanding the client's financial profile, investment objectives, and risk tolerance. They should then present all viable financing options, clearly articulating the advantages and disadvantages of each, with a particular emphasis on the risks associated with non-traditional financing like hard money and seller financing. Full disclosure of all terms, fees, and potential consequences is paramount. Brokers must act in the best interest of their clients, ensuring they make informed decisions and always operate within the legal and ethical guidelines set forth by the Georgia Real Estate Commission. Question 17. Compliance review shows that a licensed real estate broker in Georgia is discussing investment opportunities with a client who is interested in diversifying their portfolio. The client specifically asks about real estate investment trusts, REIT, as a way to gain exposure to the real estate market without directly owning property. What is the most appropriate course of action for the Georgia broker? Option A. Present a detailed comparative analysis of various REIT, including their historical performance data and projected returns, and suggest that the client consider investing in the REIT with the highest projected returns. Option B. State that REIT are a good investment for real estate exposure, and proceed with a real estate transaction without further discussion or guidance on the investment aspect. Option C. Analyze the client's financial situation and recommend specific REIT that appear to align with their stated investment goals. Option D. Explain the general concept of REIT, their structure, and common benefits and risks. Then advise the client to consult with a licensed financial advisor or securities professional for personalized investment recommendations. The correct answer is D. Explain the general concept of REIT, their structure, and common benefits and risks. Then advise the client to consult with a licensed financial advisor or securities professional for personalized investment recommendations. Explanation. This scenario presents a professional challenge because a real estate broker in Georgia must navigate the complexities of recommending real estate investment trusts, REIT, to clients while adhering to specific Georgia Real Estate Commission regulations and general ethical duties. The challenge lies in distinguishing between providing general investment information and offering specific investment advice, which may require additional licensing or disclosures. Careful judgment is required to ensure compliance and protect the client's interests. The correct approach involves educating the client about REIT as a general investment vehicle, explaining their structure and potential benefits and risks, and then advising the client to consult with a qualified, licensed financial advisor or securities professional for personalized investment recommendations. This approach is correct because it stays within the scope of a real estate broker's license in Georgia. Georgia law and the Georgia Real Estate Commission's rules generally permit brokers to discuss investment vehicles like REIT in a general educational context. However, providing specific advice on which REIT to buy or sell, or making recommendations tailored to a client's financial situation, could be construed as engaging in securities transactions, which requires separate licensing, e.g., a Series 7 or Series 65 license, and adherence to securities regulation. By directing the client to a licensed financial professional, the broker fulfills their duty to inform without overstepping their licensing boundaries, thereby avoiding potential violations of Georgia real estate licensing laws and ethical obligations. An incorrect approach would be to analyze the client's financial situation and recommend specific REIT that appear to align with their stated investment goals. This is professionally unacceptable because it constitutes providing investment advice, which falls outside the purview of a Georgia real estate broker's license. Such actions could lead to violations of Georgia real estate licensing laws, potentially resulting in disciplinary action from the Georgia Real Estate Commission, and could also expose the broker to liability under securities laws if they are not properly licensed to provide such advice. Another incorrect approach would be to present a detailed comparative analysis of various REIT, including their historical performance data and projected returns, and then suggest that the client consider investing in the REIT with the highest projected returns. This is professionally unacceptable because, similar to the previous incorrect approach, it moves beyond general education into specific investment recommendation. While presenting data might seem objective, the act of suggesting which REIT to consider based on performance metrics constitutes investment advice, which is beyond the scope of a real estate license in Georgia and could be seen as an attempt to circumvent securities regulation. A final incorrect approach would be to simply state that REIT are a good investment for real estate exposure, and then proceed with a real estate transaction without further discussion or guidance on the investment aspect. This is professionally unacceptable because it fails to adequately inform the client about the nature of REIT as an investment, including their inherent risks and the fact that they are distinct from direct real estate ownership. It also neglects the broker's ethical duty to act in the client's best interest by not providing appropriate guidance or directing them to qualified professionals for investment-related decisions. Professionals should employ a decision-making framework that prioritizes understanding the boundaries of their license and ethical obligations. This involves clearly differentiating between providing general information and offering specific advice. When a client's inquiry touches upon areas requiring specialized knowledge or licensing, like securities, the professional's responsibility is to educate the client about the nature of the topic and then facilitate their connection with a properly licensed and qualified expert in that field. This ensures client protection and maintains professional integrity. Question 18. During the evaluation of the Georgia real estate market for a client interested in purchasing investment properties, a broker observes a national trend of rising interest rates and a slowdown in manufacturing jobs in certain regions. Considering these economic factors, which of the following actions best demonstrates professional judgment and adherence to Georgia's real estate regulations? Option A. The broker assures the client that despite national economic shifts, the Georgia real estate market is inherently stable and will continue to appreciate at a consistent rate, based on past performance. Option B. The broker researches local Georgia employment statistics, analyzes the impact of current interest rate trends on mortgage affordability within the state, and investigates any significant local development projects that might influence property values, then advises the client based on this localized economic assessment. Option C. The broker focuses exclusively on national news reports about the manufacturing sector's decline and advises the client that all real estate investments in Georgia are likely to decrease in value due to this broad economic downturn. Option D. The broker recommends that the client immediately sell all existing Georgia real estate holdings to avoid potential losses, citing only the national increase in interest rates as justification. The correct answer is B. The broker researches local Georgia employment statistics, analyzes the impact of current interest rate trends on mortgage affordability within the state, and investigates any significant local development projects that might influence property values, then advises the client based on this localized economic assessment. Explanation: this scenario presents a professional challenge because it requires a real estate broker in Georgia to interpret and act upon broad economic indicators that can significantly impact property values and market demand, while also adhering to their fiduciary duties to clients. The broker must balance providing informed advice with avoiding speculative or misleading statements, ensuring all actions are grounded in sound market analysis and ethical practice, as defined by Georgia real estate law and the Georgia Real Estate Commission's rules. The best approach involves a comprehensive analysis of local and regional economic factors that directly influence the real estate market in Georgia. This includes examining employment trends, interest rate movements, population growth or decline, and local development projects. By synthesizing this information, the broker can provide clients with a realistic outlook on market conditions, potential investment opportunities, and property valuations. This aligns with the Georgia Real Estate License Law, which mandates that licensees act with honesty, integrity, and competence, and provide clients with accurate information regarding market conditions. It also reflects the ethical obligation to represent clients' best interests by equipping them with knowledge to make informed decisions. An approach that focuses solely on national economic trends without considering their specific impact on the Georgia market is insufficient. While national trends provide context, their translation to local markets can vary significantly due to regional economic drivers, making this approach incomplete and potentially misleading for clients. This fails to meet the standard of competence and due diligence required by Georgia law. Another unacceptable approach is to make definitive predictions about future market performance based on limited or anecdotal evidence. Real estate markets are complex and influenced by numerous variables. Making guarantees or overly optimistic projections without robust supporting data violates the principles of honesty and integrity. This can lead to misrepresentation and breach of fiduciary duty, exposing the broker to liability. Furthermore, an approach that ignores current economic conditions and relies solely on historical market data is also flawed. While historical performance can offer insights, it does not account for shifts in economic policy, technological advancements, or unforeseen events that can dramatically alter market dynamics. This lack of current analysis demonstrates a failure to stay informed and provide relevant advice, which is a cornerstone of professional responsibility in Georgia. Professionals should employ a decision-making process that begins with understanding the client's objectives. This is followed by a thorough research phase, gathering data on relevant economic indicators at local, regional, and national levels, and critically analyzing how these indicators are likely to affect the specific Georgia market segment relevant to the client. The broker must then translate this analysis into clear, objective advice, always emphasizing that market conditions are subject to change and avoiding speculative pronouncements. This systematic approach ensures that advice is well-founded, ethically sound, and compliant with Georgia's regulatory framework. Question 19. What factors determine the most compliant and ethically sound method for a Georgia real estate broker to manage and report on client funds received during transactions, considering the Georgia Real Estate Commission's regulations? Option A: relying on verbal agreements with clients regarding fund handling and using personal notes to track deposits and disbursements. Option B: combining client funds with the brokerage operating account to simplify cash flow management and using only bank statements for financial oversight. Option C: depositing client funds into the trust account only when a transaction is nearing closing and maintaining only summary-level records of received funds. Option D: strict segregation of client funds into a designated trust account, prompt deposit of all received funds, and the maintenance of detailed, contemporaneous transaction records for each client, reconciled regularly with bank statements. The correct answer is D: strict segregation of client funds into a designated trust account, prompt deposit of all received funds, and the maintenance of detailed, contemporaneous transaction records for each client, reconciled regularly with bank statements. Explanation: This scenario presents a common challenge for real estate brokers in Georgia, balancing the need for accurate financial record keeping with the practicalities of managing multiple client transactions and diverse income streams. The professional challenge lies in ensuring compliance with the Georgia Real Estate Commission's (GREC) stringent requirements for trust account management and record keeping, while also maintaining efficient business operations. Failure to adhere to these regulations can result in disciplinary action, including license suspension or revocation, and significant financial penalties. The best approach involves meticulously segregating client funds from the brokerage operating funds and maintaining detailed, contemporaneous records for all transactions. This includes promptly depositing all earnest money, security deposits, and other funds received on behalf of others into a designated trust account. Furthermore, comprehensive records of all disbursements, including dates, payees, and the purpose of the disbursement, must be maintained. This aligns directly with GREC Rule 520-107, which mandates the proper handling and accounting of trust funds and requires brokers to maintain accurate and complete records of all transactions. This proactive and compliant method ensures transparency, protects client assets, and satisfies regulatory obligations. An incorrect approach would be to commingle client funds with the brokerage operating account. This is a direct violation of GREC Rule 520-107 and demonstrates a failure to protect client assets. It creates an unacceptable risk of client funds being inadvertently used for business expenses or becoming entangled in the brokerage's financial affairs, leading to potential legal and ethical breaches. Another incorrect approach is to delay the deposit of client funds into the trust account, or to maintain incomplete or inaccurate transaction records. GREC Rule 520-107 requires prompt deposit of funds and the maintenance of detailed records. Such delays or inaccuracies can obscure the flow of funds, hinder audits, and make it difficult to account for all monies received and disbursed on behalf of clients, thereby failing to meet the regulatory standard for diligent record keeping. Finally, an incorrect approach would be to rely solely on bank statements to reconcile trust accounts without maintaining a separate ledger or system that tracks individual client transactions. While bank statements are a crucial reconciliation tool, they do not provide the detailed transaction-level information required by GREC for each client. This lack of granular detail makes it impossible to demonstrate proper management of individual client funds and violates the spirit and letter of the record-keeping requirements. Professionals should adopt a systematic approach to financial management. This involves establishing clear policies and procedures for handling client funds, utilizing accounting software designed for real estate trust accounts, and conducting regular internal audits of trust account records. A commitment to meticulous record keeping, prompt fund handling, and strict adherence to GREC regulations is paramount for maintaining a reputable and compliant brokerage operation in Georgia. Question 20. Cost-benefit analysis shows that streamlining commission payouts can improve efficiency, but Georgia real estate brokers must strictly adhere to state regulations. If a Georgia licensed broker, operating as a sole proprietor with several independent contractor agents, successfully closes a transaction where the buyer's agent is affiliated with another brokerage, and the seller's agent is one of their independent contractors, and the total commission is $12,000, how should the commission be dispersed to ensure compliance with Georgia Real Estate Commission rules, assuming a 50/50 split between the cooperating brokerages and a 70/30 split in favor of the agent for the seller's side? Option A. The closing attorney disburses the full $12,000 commission to the Georgia licensed broker. The broker then pays $6,000 to the cooperating broker and retains $6,000, from which they pay their independent contractor agent 70% of that amount. Option B. The closing attorney disburses $6,000 to the cooperating broker and $6,000 to the Georgia licensed broker. The cooperating broker then pays their agent, and the Georgia licensed broker pays their independent contractor agent 70% of the $6,000. Option C. The closing attorney disburses $6,000 directly to the cooperating broker and $6,000 directly to the Georgia licensed broker's independent contractor agent. Option D. The closing attorney disburses $6,000 to the cooperating broker and $6,000 to the Georgia licensed broker, who then directly pays their independent contractor agent 70% of the $6,000. The correct answer is A. The closing attorney disburses the full $12,000 commission to the Georgia licensed broker. The broker then pays $6,000 to the cooperating broker and retains $6,000, from which they pay their independent contractor agent 70% of that amount. Explanation. Scenario analysis. This scenario presents a common challenge for real estate brokers in Georgia, accurately calculating commission splits when multiple agents are involved, especially when one agent is an independent contractor. The complexity arises from ensuring compliance with Georgia real estate license law, which governs how commissions are handled and disbursed, and maintaining clear, ethical agreements with all parties. Miscalculations can lead to disputes, regulatory violations, and damage to the brokerage's reputation. Correct approach analysis. The best professional practice involves the broker directly receiving the full commission from the closing attorney, and then dispersing the agreed-upon split to the cooperating broker and the independent contractor agent. This approach aligns with Georgia Real Estate Commission (GREC) regulations, which mandate that brokers are responsible for all transactions conducted by their affiliated licensees. By having the commission flow through the broker, they maintain direct oversight and control, ensuring proper accounting and adherence to their brokerage agreement with the independent contractor. This method also prevents direct commission payments to unlicensed individuals, which is a violation of Georgia law. Incorrect approaches analysis. Disbursing the commission directly from the closing attorney to the independent contractor agent is incorrect because it bypasses the employing broker. Georgia law requires that all commissions due to a licensee be paid to the broker with whom the licensee is affiliated. This direct payment circumvents the broker's responsibility and oversight, potentially leading to violations of license law and the brokerage agreement. Having the closing attorney split the commission directly between the buyer's agent's broker and the seller's agent's brokerage, without the seller's agent's broker first receiving the full amount and then paying their independent contractor, is also incorrect. While the initial split between brokerages might be standard, the subsequent internal distribution by the seller's broker must adhere to the broker's responsibility for their agent's compensation. This approach doesn't explicitly address the broker's role in managing the independent contractor's earnings, allowing the buyer's agent to receive their commission directly from the buyer and the seller's agent to receive their commission directly from the seller, with the seller's agent then paying their independent contractor, is fundamentally flawed and illegal in Georgia. Real estate commissions are typically paid by the seller, and all licensees must receive their compensation through their sponsoring broker. Direct payments between parties and licensees, outside of the broker's involvement, are prohibited and can lead to license suspension or revocation. Professional reasoning. Professionals should always prioritize regulatory compliance and ethical conduct. When faced with commission disbursement scenarios, the decision-making process should begin with a thorough understanding of the Georgia real estate license law and the specific brokerage agreements in place. The broker must act as the central point of financial control for all commission-related activities. If there is any ambiguity, consulting with the Georgia Real Estate Commission or legal counsel specializing in real estate law is advisable. Maintaining clear, written agreements with all affiliated agents, especially independent contractors, is crucial for preventing disputes and ensuring smooth transactions.